This conference will now be recorded.
So as you know, we're working on the accounting cycle, going very slow. Chelsea says we're going too slow, but we've been on step 1 and 2.
Wait a minute. Wait a minute. That is not what I said.
Just teasing. Well, step 1 and 2, we started with that analyze transaction and make journal entries. Then we went to steps 3 and 4, posted a ledger and prepare trial balance. So we finished steps 1 through 4. By midterm, we're going to skip 5 for now. We'll come back to 5, but sometimes 5 gives people trouble, so we'll skip it. 5 and 6. And we go into 7, we're going to go and prepare financial statements and close out the accounts. We're going to prepare financial statements and close out the accounts. So that's where we're moving now. And what I will tell you that you will be doing is reworking every one of those problems, going from steps 1 all the way through 8. We're going to go from steps 1 through 8. Because you all are not. So did y'all hear that? That we're going to work every one?
Yep.
So they're in their assignments. So you're going to pull them out. We're going to start with that first test, which is an easy one. And we may get to that. We'll see. I don't know if we get to it today or not, but we're going to step 8, preparing the financial statements and closing the accounts. Okay. This was one of the trial balance problems I think we had. It was journal quiz 2, where we invested $30,000, we paid advertising, we purchased supplies, we paid for $2,000 on a 1-year insurance policy, purchased 10 automobiles, paid professional fees, on and on and on. And we made the journal entries. So for the person who missed this, when you invest in the business, you're starting the business, you debit cash and you credit common stock, not debit common stock and credit cash. So it's a good thing that we're not face to face, because I would have my ruler walking around. We paid the advertising expense, debit advertising expense, credit cash. Then we purchased supplies on account, debit supplies, credit account payable. Then we bought some prepaid insurance. We debited the prepaid insurance and we credited cash. Then we bought an automobile, $200,000 worth, paying $25,000 down, signing a note for the balance. We paid professional fees of $8,000, debit professional fees and paid cash. We get cash sales of $75,000, debit cash, credit sales. We paid rent expense, debit rent, credit cash. We had sales on account, $150, so we debit account receivable, credit sales. Then we paid on accounts payable, debit account payable, credit cash. We collected from customers, debit cash, credit account receivable. We paid dividends, debit dividends, credit cash. We paid on the note, where we debit notes payable, interest expense, and credit cash. Are there any questions about any of those journal entries? I didn't keep going back and forth. But is there any in that 13 that causes you to have a problem? Anyone? Or do I need to go back and pull up y'all exams? See if I got a problem.
Yeah, Prof. I think one that could be kind of giving me the trouble is like when it has like a when it has 3 lines, like it'll say cash, and then on the note payable, and then it'll be a principal.
Okay, so let's look at this one. We purchased 10 automobiles for $20,000. So we purchased 10 automobiles for $20,000 each. How much in automobiles did we purchase?
200,000.
We paid $25,000 down, right?
Right.
So we signed a note for how much?
175.
Okay, that's it. So that's that journal entry.
So the cash is 175.
25. You only paid 25 down.
I see.
You debit auto 200, you credit cash 25, you credit notes payable. The debits still have to equal the credits. Is there another one that gives anybody trouble?
13.
13 also involves a double 3 accounts. If you got a student loan and you borrowed $15,000 and the interest is $4,000, how much money do they want you to pay?
19.
They're gonna want you to pay back $19,000. The amount you borrowed and the interest. So when you make that journal entry, you got the debit note payable, $15,000. That's what you borrowed. But then this is the extra amount that you got to pay, and you got the credit cash for $19,000. Any questions on? So do we see that now?
Yes.
Are there any questions on any of the other journal entries? They're pretty much straightforward, I think.
No, I think so far so good.
So what?
So far so good.
So far so good. Okay. So then we posted these to the ledger. And assuming these were posted correctly, we had cash at 133 and account receivable 25 and supplies, prepaid insurance, auto. So we just posted those in. Do we know how to post? Is there anybody having a trouble posting? Let's go over one. On the first one, it was a debit in the journal entry, it's a debit in the ledger. If it's credit in the journal entry, it's a credit in the ledger, as we try to find out after all these transactions how much we got in cash in each of the accounts. So on that first one, we debited cash 30,000 and we credited common stock. It's 30,000. On the one that was difficult, where we bought the equipment, the autos, we debited auto for 200,000. This is probably the credit for 25 for cash. Then there should be a note payable on him with a credit of 175,000. Or when we pay the interest and principal, we debited the note payable of 15,000, and we debited interest expense for 4,000. And there should be a credit to cash for how much? 19,000. Are there any questions on posting? So once we post, we add up the debits, we add up the credits, and we take the difference. We don't put in, as some people, a few people did, the 230 and the 97. We put in 133, which represents the cash that we have. And we do that on all the accounts. And we come up with this trial balance. So this is your trial balance, and this is how your trial balance should look. Cash receivables, supplies, insurance, auto, accounts payable, notes payable, common stock, dividend, sales, and then the expenses. This is how your trial balance should look. Any questions on this trial balance?
Sir, no, sir.
Okay. So now it's time to,
Professor Boyd,
yes,
on the trial balance, like after the dividends, what was that? I'm trying to see. What about all the other stuff? Because I always want to put everything in there, and I'm not sure what's the few things that you want. You see what I'm saying?
just put in the ones that I asked you to put in. Don't worry about the others. This
Okay.
thing is not moving. It must have an old program. But it does. It got a little bit larger there. Okay, it's getting a little bit larger now. Can everybody see it now?
Yes.
We can see it. So what we want to do now is we get into our Excel sheets and we want to put those balances in here on the trial balance. So we have them here. So I'm gonna copy them down. So cash is 133. Account receivable is 25,000. Supplies is 10,000. And prepaid insurance is 2,000. So we can be a little bit off if that happens, but not out of categories. Auto is 200,000. And what else do we have? The accounts payable is 5,000. The notes payable is 160. Wait a minute. No. 160,000, and common stock is 30,000. Dividends is 5,000. Notice we don't have anything in retained earnings yet. We're going to talk about how we get there. Sales is 225,000. Advertising expense is 3,000. What else do we have? Rent expense is 30,000. We have professional fees, 4,000. And the professional fees is 8,000. And the interest is 4,000.
Professor Boyd,
Yes.
you said something about meeting you on Friday. Oh, what time should we meet you on Friday? Because I don't think you make that clear.
I guess, what's a good time on Friday?
Will you record it? Because I have to work from 2 to 10. So, yeah.
But we can always start at 11 o'clock.
Okay.
We will record it. So
Thank
now
you.
we want to begin our working.
Hey, Professor, what formula are you using to get that total like that? Sum?
Auto sum. See it?
Okay. Yeah.
Okay.
All right, never use that.
Never used that one before. That's the easiest one. So let me go here. Insert. Went the wrong place. That's okay. Insert. Okay. Now we're ready to begin on our financial statements, Chelsea. We're ready to prepare these financial statements. So this is what we're going to do. We're going to do the income statement first. Everything below dividends is on the income statement. So everything from sales on down is on the income statement. So I can come in here, what under my sales number? It should be 220. How this thing jump down here? Did all my stuff jump? Like it's right place. So I can go in here and copy and put my sales up here. I don't have any cost goods sold, so my gross margin is 225,000. Then I can come in here and get my expenses. Come in here and copy them. Wait a minute, let me see. Rent. So if I want to get total expenses, how much are our total expenses? If we add these up, how much do we have? Is that 45,000?
Yes, that is 45,000.
So what's our net income going to be?
Would that be the 45 plus the 225?
So when you look at your bank account, when you get paid and you pay your rent, you add that money to your bank account. So you just got paid, you pay your rent. So your bank account goes up when you pay your rent. Is that what you're telling me?
No, you
No, that's not true.
subtract.
You got to subtract the expenses. So what's our net income going to be? I can't subtract that. Is that 180?
180?
Yeah. So this company had 225 in revenue. Then we pull out the expenses and put them over here. They were 45,000. So the net income is 180. Is it becoming apparent why you need those accounts in order now?
Absolutely.
Yes.
So I thought it might become clear. So everything from sales on down, so if you're working with your Excel, if you got the accounts in order, copy your sales number, put it over here, copy your expenses, put them in, and your net income is done. How long did it take us to do that, Chelsea?
Like 2 minutes.
Uh-huh. So so this just shows how much income we made. I mean, so our company made 225. It paid its expenses. Its net income is 180,000. I mean, you have net income personally, you pay your expenses, you have something left over. Now we want to look at how much of the earnings we retain in the business. So this is a new company. We don't have any beginning retained earnings. But we're going to pick up our net income. So we just bring this 180 down and put it here. Less the dividends, we go and see how much we paid in dividends. 5,000. So we therefore retain what? 175 in the business. So you earn 180, you paid the owners 5,000 in dividends. And so therefore, this is what you have in the business. So all of this stays the same. Beginning retained earnings plus net income less dividends equals ending retained earnings. We got our second statement done. What about that, Ms. Chelsea? 2 statements already done.
A little faster, in 2 minutes.
Now we need to do our balance sheet. What a balance sheet represents, different from your income statement, how much income you made in 2020. Okay, given that you had income and you paid expenses, what kind of assets and liabilities are left over for you? So what kind of assets and liabilities do you have left? So if I
would say
make
assets.
this prepaid expenses, and we'll make this auto. So when we get ready to do the balance sheet, we go to the top. Everything from retained earnings up goes on the balance sheet, okay? So then we have the asset side for these asset accounts. We can go on and copy them. Copy. And we can auto sum them. And this says we have 370,000 in total assets. Now the liabilities and the owner's equity have to agree with that, okay? And like we said, this was a note payable here now. And so with the note payable and the accounts payable, we just simply go up here, pick up these 2 numbers and copy them. And so our total liabilities are 165. So what this tells us is that we got assets of 370, but we owe people 165,000. So remembering only things above retained earnings go on that balance sheet. Then the common stock comes next. That's what, 30,000. Now we need a retained earnings number. Now, you notice we had 0, okay? But our retained earnings number is going to come from here. Okay, so whatever the ending, we need the ending retained earnings. So we're going to copy that, paste that here. So our ending retained earnings always comes from the last number on the statement of retained earnings. So it was 0 at the beginning. Now the ending, is what's going to go on the balance sheet. And so our total equity now is what? So it's 205.
205.
And if we add our equity and our liabilities, how much do we have? What's 205 and 165?
Wouldn't that be 265?
What's 205 and 165?
170? No, 370.
370.
370. And our sides are equal, so we're in good shape. So the income statement, we calculated it, then the statement retainer. When we did this balance sheet represents the accounting equation, asset equal liabilities plus stockholders' equity or owner's equity. And so these sides have to be equal. And so how much time did it take us to do these 3 financial statements?
A good 10 minutes.
Okay.
Yeah, about 10 minutes.
So the hard work we've done, we've made the journal entries, we post to the T accounts, we got a trial balance. That's why we were spending our time working on that. And so if you listen and you got your accounts in order and you got all your journal entries and everything right, then this part of the process is only about 10 minutes.
It's kind of like putting a puzzle together type of thing.
Yeah. But you see, when you look at a company, you're not going to see the trial balance. You're not going to see the journal entries or the ledger. The only thing that you're going to see is the income statement, statement of retained earnings, and balance sheet. So you need to know how it was prepared and hoping that it was prepared accurately.
Right.
But this is just a simple cut and paste if you got your accounts in order. And then the balance is correct.
Okay.
If you have them in order and the balances are correct. Now, closing entries. Every account below retained earnings is a temporary account. It is a temporary retained earnings account. And so what we need to do is to go from a balance of 0 in here in this account to a balance of 175. And the closing entries are going to allow us to do that. So once we, it's not going to stay red because it's positive. Anyway, this is what it has to be. And so to get it there, we're going to close out all of these accounts. At the end of the day, none of these accounts are going to be here. So let's see here. Make this more. So we're now ready for step 8, closing the account. So let's see if we can talk about step 8, closing the accounts. Okay. As indicated, there are 2 types of accounts, permanent accounts and temporary accounts. The permanent accounts are at the top, retain earnings up, and they keep going. Temporary accounts, dividends down, we close them out at the end of each period. Every company does that. Every company makes journal entries, post to the ledger. They prepare their financial statements after the trial balance, and they close out the accounts. Take, for instance, your bill for the fall semester. If you paid it, it was closed out. So you wanted that closed out. You didn't want it to show that you owed things. So with a company, and with all, a lot of you all, you're working. So as you file your tax return, your taxes are going to reflect the income from 2020. And then we're going to close it out to get ready for 2021. So we keep the years separate. So a company has to do the same thing. It's got to calculate its income every year so that it can then calculate its income tax expense. So, and we'll go into permanent accounts. Permanent accounts are those balance sheet accounts, asset, liabilities, and stockholders' equity. They stay all the time. Temporary accounts, dividends on down, we close them out every year to 0. And so, let's see if we can look at this summary of closing entries. First of all, we close out the revenue by debiting the revenue and closing income summary. If we credited it to create it, we got to debit it. So in the first closing entry, we debit revenue and credit income summary. In the second closing entry, we debit income summary and credit expenses. We're going to debit income summary and credit expenses. In the third closing entry, we close out the net income or net loss. So typically, we're going to debit income summary and credit retained earnings because we got income to close that out. Then in the fourth closing entry, we close out dividends. So there are 4 closing entries. We close out the revenue, then we close out the expenses, then we close out the net income, then we close out the dividends. So let's see if we can look at an example, a simpler one than what we have. We have this trial balance showing cash, receivable, supplies, equipment, accumulated depreciation, accounts payable, notes payable, common stock. Everything up here is permanent. Then we have dividend, sales, cost of goods sold, rent, and we're going to close all of those out. So I'll unstrike them for now. Here's our income statement, sales, less cost of goods sold, less rent, net income, and here's our statement of retained earnings. So we prepared the beginning retained earnings, as you can see in our example, was $15,000. But when we add the net income 300, subtract the dividends 10, the ending retained earnings is 300,000. And the only way we're going to get it to be 300,000 is to make some journal entries for that to happen. Here's the balance sheet. And so as you can see, it's balanced out, but it's got the new retained earnings of 305, not the old one of 15. So let's look at the closing entries. In the first closing entry, we're going to close out the revenue, and we don't like a lot of transaction retained earnings. So we use what's called income summary, which is a temporary account to close out these items. So we debit service revenue and credit income summary. So once we do that, then the sales is closed out. So the first closing entry makes the sales 0. In the second closing entry, we debit income summary and credit cost of goods sold and rent expense. So now we've closed out the expenses. So we're closing out everything below retained earnings. So when that happens, the third closing entry, we debit income summary to credit retained earnings, and we're using the amount on the income statement. So whatever's on the income statement is in closing entry 3. Then in closing entry 4, we debit retained earnings and credit dividends. And so now the dividends account has been closed out. So once the closing entries are finished, everything on the retained earnings is closed out. Let's look at these T accounts I have here. So the T account, so it showed the beginning balance for retained earnings of 15,000. Okay, that was the beginning balance. Then dividends had the 10, and I'll just take all these out for now. So I just took out all the strike throughs. So when we made the first closing entry, I'll take these out too. And probably to make it clearer, let me take out all the balances, all the
Hey,
closing
hey,
out.
bro.
So I'm taking the closing entries out right now. Sales had this balance.
Hey, Professor Boyd.
Yes, sir.
After this, can you put these pages on Blackboard so I can like go look at it and study it on my own?
I guess I could.
All right, thank you.
And of course, you could buy your primer, but I'll give you another little break to the end. Okay, so this is how the accounts look before the closing entries. And of course, these amounts are not here. So this is how these accounts look before we put the closing entries in. So we make this first closing entry, we debit service revenue of 700,000. And we credit income summary for 700,000 because we don't like a whole lot of extraneous entries. So this is IS and income summary into the retained earnings account. We just want net income and expenses there. In our second closing entry, we close out the expenses. So we're going to debit income summary 400,000. And we're going to credit each expense. We credit cost of goods sold 300,000. And we credit rent for 100,000. So after the first two closing entries are made, then all of these accounts are reduced to zero, just like your bill the first semester. As soon as you pay it, it's closed out. Then on the third closing entry, we're going to debit income summary for whatever's on the income statement, which was 300,000, not 305, Chelsea, but 300,000 was on the income statement, and credit retained earnings. So now we're going to debit income summary, and we're going to credit retained earnings for 300,000. And so now this temporary holding account is closed out. Then we're going to come to dividends and make the fourth closing entry, debit retained earnings, credit dividends. So we credit it. And we're going to debit retained earnings. So once these entries are made, then the balance of retained earnings becomes 305, which is what we were trying to do to get this account from where it was at 15,000 to its ending balance of 305. So that's what the closing entries do. Okay? The closing entries close out every account. It closes out every account below retained earnings. So let's see if we can make these closing entries. So what's the first closing entry going to be? Well, let me go. I'll go back here. I'll just put them close by. So on the first closing entry, we're going to debit sales, and we're going to credit income summary, which is a temporary account. Let me just put capital IS for income summary, so I'll reach over. 225 and credit income summary for 225. Okay, so when we go back to our ledger, to our T accounts, and post that, then we're going to have a debit here for 225,000. And let me just see if I can copy this. So I'll make this the income summary account here. And so we would credit the income summary account for 225. That's the first closing entry. Okay. Let's go to the second closing entry where we're going to close out all of these expenses. So we're going to debit income summary now. And that amount will probably be these expense totals, $45,000. And then we're going to credit it for these items here. So I'll just see if they were coming here right. Okay. And I need to actually put income summary over because we're debiting income summary. Then I can just simply pull in these amounts. Space. Okay, so 33, 4, and 8, 45,000. So now we've made the second closing entry. So we go back to those T accounts now. We go back to those T accounts with the income summary. We're going to debit it for 45,000, I believe it was, correct? And now we credit all of these rent. We credit for 30,000. So we're zeroing out all of these accounts. 3,000. Interest 4,000. Professional fees 8,000. Okay, so going back to our trial balance now. So we've now our next closing entry is the net income. So when we make this closing entry, this close out the temporary account income summary. So we debit IS, and what we're going to credit? Retained earnings. RN. And what's the amount going to be? 180,000. Okay, so now when we post that entry, we go back to the T accounts. And so we will now debit income summary for 180. And we're going to come up here and credit retained earnings for 180. Then we go back and make our final closing entry, which is what? For the dividends. And our dividends were 5,000. So we go ahead and we go straight to retained earnings with that. So we debit retained earnings and we credit dividends for the 5,000. Then we post this entry going back to our T accounts. We're going to credit the dividends for 5,000. And we're going to debit retained earnings for 5,000. And so you will see now every temporary account is zeroed out. Every temporary account is zeroed out. And our balance in retained earnings is now 175,000. So the purpose of the closing entries is to get into the T accounts, which is zero early, to get it at 175,000. So that's how we close the process. Why don't we do this? for that first problem, that we have for the test that we just had, where I think it has 8 journal entries, I want you to go through the whole process, make journal entries, post a ledger, all the way through the closing entries. And we will look at that at 2:30 on Monday.
Okay.
2:30 on Monday. So that gives you a little breather time to get this digested.
Professor Boyd, I had a couple questions.
Okay.
So for the closing the closing entry, so there's a page and it's like completely like blank. Do we have to make it look like the first one? Or so you know how you put this like on the side of the trial balance?
Right.
You have a whole slide for the closing entries. So do you want us to put it?
I sort of put them here because I thought people might see them better.
Okay.
Put them anywhere you want them. So there is a sheet for closing entry. They can go there. Or if it helps you, you can just put them right here.
Okay. And for my last question, it was about the T account. So for the T accounts, do we just put it, can you go to the T accounts? So you said permanent and then temporary. So for most of the temporary, is it like a certain number of all the ones that have to be down here, or is it just the ones for that you're gonna zero out?
All of them are zero out. Everything below retained earnings is temporary. So you could have a lot more accounts. They're all temporary accounts. So anything below retained earnings. So remember, you had your chart of accounts, correct?
Yes.
So any account below retained earnings is temporary. So you got your chart of accounts?
I'm looking at it.
What's the first account below retained earnings?
Retained earnings is the first account is dividends.
That's everything from dividends on down and all the way on the other side, revenues and expenses. All of those are temporary accounts if you use them.
Okay, so when we do our T accounts, all the ones are under retained earnings go on the second leg of the second thing.
Yeah,
second.
those.
Okay, that was my second question.
Everything, dividends, all of those accounts, income summary, they're temporary.
Okay, so and you want us to put also the retained earnings in temporary, or you want to leave it in permanent?
That's a permanent account.
Okay, I'm just trying to double check.
That's okay. Retained earnings up permanent. See, it's on the balance sheet. So the permanent accounts are on the balance sheet.
Okay. Okay, I got it. Thank you.
Once we use them, we calculate income and how much is retained, and then we get rid of them because we got to start over the next year. It's just like with your bill. Once you pay your fall bill, you rid of that, then you got to go on to do them for the semester. Next fall, you go on to another one. So closing entries are not that hard once you get the hang of them. And so you can see preparing these financial statements is nothing but a cut and paste job. If you're not hard-headed, put those accounts in order.
Okay.
But everybody gonna have my accounts in order from now on, right? So problem one will be do as homework, for next Tuesday. And I'm just saying we will go over it on next Monday at 2:30 in case you have issues or problems. But that's your first homework for this material. And I'll be calling on certain people to do things on that problem because we got a lot of stuff to do, Si. Because eventually your homework points come from you participating. So we got a trial balance we got to get done, income statement, balance sheet, statement of retained earnings. We have 4 closing entries. We have the regular journal entry. So that's a lot of things to be called on for.
You said it's coming from the exam we took?
The exam you took. How many exams were there? If you look in Blackboard, how many exams were there?
I believe it was 5.
All right, so that gives you what you got to do between now and midterm. You're going to work 5 exams where you go all the way through this process.
I have a question. Did we agree on what time we would meet tomorrow?
We said we were going to meet 2:30 on Monday.
Oh, I did. Okay, thank you. I'm just making sure.
Okay. Yeah, I thought that, give it time to digest, let you work on it, then get that first exam and go through the steps on it. There are only 8 journal entries, so it's not that much. But of course, the 8 students are responsible for their problem, of course, now.
So you're saying that I have to do the quiz 5? Or are you
Well,
saying
not right away, probably in a week's time. So we probably will do exams 1, 2, and 3 next week, 4 and 5 the week after that, and we should be ready for the exam, ready for the midterm almost, depending on how you all are coming. And of course, we'll have a quiz where you have to go through this complete process some kind of way to make sure you can do it.
do we
Either
have to do
Thursday or the following Tuesday.
this for the 40 questions?
Yes, the C students have to do it for the 40 questions. Then the B students will let them go up to about 55. Then the A students get all of them.
All 72?
Mm-hmm.
All right, all right, all right. All right, Professor, you have a good rest of the day.
You all too. Now I will say for A students, they make an A's and they're diligent, they may not have to take the midterm as they do that 72. But
And by when are the 72 due?
Yeah,
what?
when are the 72 due?
Say what now?
When are the 72 due?
At midterm, like the 40. So
like in 2
probably
weeks?
about 2 weeks.
Bet, got you.
Say less.
In about 2 weeks.
All right.
Oh, now we're getting excited now for the 72. That's all right. But for the C students, you got to do this just for that 40. Did y'all get my 40 turned in?
Yes.
Yes.
Have you checked your emails?
When I saw Angela, I quit checking them.
Here we go. I love you too.
I gotta protect my eyes.
Okay.
Yeah, I saw you. Well, you know, I had to grade the stuff. I said, now what is she saying is 40?
You just got to read it and check it. Thank you.
All right. So we're pushing through. So, you know, we're basically finishing up the cycle, trying to get that done by midterm. You can see that these financial statements, if you're in order, are not going to be the problem. Once you do the closing interest a couple times, they should not be a problem either. The biggest problem is going to begin to try, as I showed you all, as I put y'all on blast, y'all biggest problem is doing the trial balance correct and in the right order. Got it?
Got it.